Okay, going live. Yeah.
Let me
Okay, we
refresh.
are
I need
live.
to keep track. Okay, hi everyone. Happy to have everybody joining us at like 10 p.m. Singapore time. So I think we really just wanted to take this opportunity to kind of go live once and to give back to the community where we answer questions and whatever. So for those of you who have any questions, you can leave it in the chat below, or we actually have a Slido link that we kind of put up beforehand. We wouldn't really be keeping track of the Slido link, so this is just a public service announcement. So we already written down some of the questions that you guys have asked beforehand, and we'll kind of use that as a form of kickstarting the entire conversation. So maybe just to kickstart, right? I think one of the key question, or one of the very interesting question, is since we are already approaching the end of 2022. I just wanted to get some of your investing takeaways, maybe one important investing takeaway in 2022. Maybe Kelvin, you want to kickstart the conversation?
Important lesson for 2022.
Yes.
I guess we all found out that stocks can crash after all. That's why we are called bad holders lah. But I think like if we are confident in our stocks, all this crash just means that we can buy at the cheap, right? Like for Tesla, at least for me lah, I know that the stock fundamentals doesn't really reflect what's going on with the stock price. So if I didn't have so much Tesla stock, I would be diversifying. I will be investing into Tesla stock lah. So that's for me.
Right. What about Bunti? What's your biggest investing takeaway for 2022?
Yeah, I think I will echo what Kevin just said. But in a slightly different way, that I would say hold some cash. Because I think for those who watch my content in the past, I mentioned I am like almost always fully invested. So not much cash. It's just like waiting for new saving and then deploy, new saving, deploy. That's my style. But now looking at the share market so weak, like some share price drop to a very attractive level, but not much cash to deploy. I think if I say want to learn, I mean the things that I learned is that next time when the time is good, probably put some money into cash as a buffer, help up with the emotion. And I think those are something that I learned.
Right. Before I pass the time over to Eric, just a public service announcement. Remember to help smash the like button on the way out. And if you want to comment in the live chat, I think you need to stay subscribed as well. So help us hit that 4-digit subscriber number. But yes, back to Eric. What's your biggest investing takeaway for 2022?
Okay, just to let you guys know, my Wi-Fi here is lagging very badly. So whatever you all say, right, when you are laughing, right, the laughter only reached me like 3 seconds later. So yeah. Anyway, this year, what I learned most, well, I saw my portfolio like sliced by more than 50%. So it's like pretty bad for me. I realized one thing that I'm actually not very risk tolerant. I thought I was. That's why I bought Tesla. But after Tesla showed me that I'm a pretty paper hand, but I didn't sell. I didn't sell. It just feels not very good to see so deep red portfolio. Yeah. So this year I learned something about myself. I think I'm should be more into the diversified type of portfolio lah, rather than concentrate on one stock. Yeah.
Right. So if I can echo the sentiments, I think for Kelvin and Bunti is the focus on having a cash position so that you can take advantage of opportunities. Then for Eric is learning about yourself, if I can put it that way. I think for me personally, because I think like my name suggests, I'm actually all in China. So for those of you who have been following the Chinese market, I think 2021 has been my bad year. And for this year, I think for many of like the growth stocks and the more popular stocks there, many sentiments or many lessons echoed by Eric. I've kind of experienced it last year. I mean, yeah, a stock can be down 70% and it can go down 30% again. So that's just a heads up. I'm not cursing anything, but I'm just stating facts that whatever I've experienced. So my biggest lesson or takeaway is really more of like this idea of margin of safety. So we think that a particular stock is cheap, or we think that, oh, this stock can go to the moon. But I would be more cautious and be more skeptical about it, because we can all see stocks drop like by a large extent. So then comes the point of, even though we believe that we don't want to quote unquote time the market, right? But I believe that timing your entries and having a low price entry is quite important. So that's just my own learning. I can be down Alibaba for like 30%, like negative 30%. Somebody's really up because they bought at the lows. So I'm a little bit salty, but that's how life works. But I think on a similar note, right, based on 2022, because we are rounding up the year, now if we leap forward, because it's end of the year, right, into 2023, what's your target, or what do you wish to achieve? There's this very interesting question in terms of like, what do you want to achieve? Could be in personal life, your own learnings, or maybe a targeted portfolio number, etc. So maybe for Bunti, do you have any targets for 2023?
Before I answer that questions, I just want to say one thing about the previous one. You remember, like just now, I think Eric mentioned about diversifications, and then Kelvin
Right.
also in recently talked about like want to diversify to other holdings and not
Right.
just like concentrated into Tesla. I think if you rewind 1 year ago, like let's say end of 2021, right? Very funny. Everyone was asking me like sniper theory, do you sniper? Do you snipe or not? That kind of questions. Then
Who teach this
after one
sniper
year,
theory again?
huh?
Sorry, where did this sniper
Sniper
theory come
theory,
from?
I think this one also come from Chicken Genius. He's the one that
Oh,
say,
okay.
okay, if
Right.
you really have high convictions, you just all in into one stock, you sniper lah, do one,
Right.
don't like 5% put here, 5% put there until like become a stock market. Why don't you just buy S&P 500, right? I think that was then like after 1 year, everything just changed. Now everyone say, okay, diversifications. Very funny, I think. I think it just shows that just like after 1 year, the mood, the sentiment totally different now. Now people talk about diversifications, right? So I found it quite interesting. Okay, to answer your questions, focus for 2023. Not really investing, but I would say just focus on the work, focus on the career. Because when talk about 2023, so many people talk about recession and then whether we were able to keep our job or not. So I'm not like some of the business owner. So I'm just a salary man. So as long as there's a job, there's a way for me to contribute this salary, I'm happy lah. Just focus on the job, make sure that I can add values. Yeah, that's for me.
Okay, then maybe I will change the question a little bit for Kelvin, right? I wanted to understand, if let's say there is a newbie investor that just came into the market, he has a first $10,000 pot. Then he asks, Kelvin Koko, what am I supposed to do? Do you have any advice for a new beginner that to move into investing into 2023?
Sniper theory. No, just kidding. I think it depends on what you want really. Like, okay, so I have this like official and unofficial advice lah. Officially, invest safe, invest what you know in. Unofficially, I would say like if you think that you are a god of investing, right? I suggest try your luck at investing. Be prepared to lose everything, and at least let the market show you who is really. Are you really good at investing, or are you actually a noob lah? Because like I think you have to be taught a lesson to know that whether you are good or not first lah. Otherwise, it will be bad if you think if you are god of investing, right? And this kind of crash comes later on in your life, then I think it will be much more worse lah. So either way, only play with what you can lose lah. And I think at least know what's your goal in investing, I guess.
Right, thanks for sharing. Actually, I have the same. It's an age-long debate lah. Like comparing active investing versus passive investing. Should you just index? Should you have a 60-40 distribution? I think that's the official, like, a lot of like wealth managers or people in the industry, wealth management industry, they'll tell you this is the quote unquote correct way to go. But truth be told, I think if I ask myself, if I don't try, how do I know that I'm not Warren Buffett? But okay, that's not good quote unquote financial advice, but I'm just stating a fact there. So if I were to switch over, right, if I were to ask Eric, so based on your own current investing journey thus far, do you still want to actively invest, or do you want to go back to that 60-40 bond rule and just index and whatever, like from your own perspective?
So from my perspective, I I just took a look at my portfolio this year. Actually, in terms of the value wise, right? Because of the money this year I pump in still, not much change lah. But by right, it should have gone up, right? But it didn't. It stayed roughly around the same. So I think the asset allocation will more or less stay quite constant. We want to try to be a balance in terms of like equities, bonds, and then property wise. These three pillars needs to be somewhat around the same. So when I talk about diversification just now, right, I'm referring more to like the equities allocation. Like within the equity pot, I want to be more diversified lah. Like maybe 60% in uh, ETF, like QQQ or SPY, then maybe 20% in like two stocks, something like that. Okay, so
Eric,
I
did
still, yeah,
your allocation change? Like you were like 60-70% Tesla, right?
60-70% Tesla. Oh, that was because Tesla was at a high ma. So it's 67. Now it's like it cut by half. So rightfully it's now 30% lah.
But
So
I think
after it
in,
drops some more.
right. But I think in one of our previous interviews, right, you were saying that you actually adopted a dumbbell strategy, right? So you one part where you talk about like you have a risky position, and then the other part you have much safer ones like REITs and like banks, stocks, etc. Are you still gonna employ the same strategy moving forward, or are you gonna start pivoting?
Okay, because my portfolio is quite like it's not a really like a small ship lah. So I have to slowly adjust here and there, right? It cannot be
Portfolio
once off.
size too big lah. Yeah, I understand.
Let's
No,
just put
just
it that
joking.
it's not like a few $1,000s lah. If it's
Okay,
only a few
can.
$1,000s, we can like just sell everything and shift to another thing, right? But now we have to slowly adjust. And
Right.
like Kelvin, I mean, Kelvin also has to slowly dilute his Tesla, right?
Yeah, it's like an HDB size,
Not bad.
a small
Very, very
HDB.
high.
Yeah.
Right.
Last
So
last time it was Maisonette.
Last time is
Now
condo.
last time condo, now 3 bedroom.
okay,
Thanks to
understand.
Elon Musk.
I think on that note, remember to I see there's a lot of people tuning in. I think there's like 70 of you coming in, but we only have 20 likes for now. So do just help press like Mr. Lu, right? Press like button.
Yeah, now I just want to say it now sounds like Mr. Lu.
Press
Please
the like button.
press
Yes.
press
And
the like, press the like.
if you guys have any questions, feel free to leave in the comment section. So we actually didn't let the comments run. So I will start from the top after we finish from the Slido. So try not to add questions into the Slido. Just type in the live chat. And one last thing also is there are a few questions asking about specific stocks. So I think specifically in this live session, we try to avoid specific stocks like Uber, Adobe, etc. I mean, if you want to ask, I mean, the biggest that we will allow is Tesla, since we have three big Tesla bulls here. So maybe for Tesla, we can touch a little bit on it. But if you are to come in and just punch in a ticker symbol, I think it's a bit pointless. Like all we can say is, oh, I don't really know about Uber, I don't really know about Adobe. So let's refrain from wasting time over there. So I think there's this one most important question that has the most upvote on Slido. Asking why is Kelvin so handsome? So maybe Kelvin, you want to share some of your beauty tips to the audience?
Wow, I handsome.
Yeah.
Then I think no one in
5
the world is
upvotes.
handsome already, yeah.
Don't need so humble. Do you have any beauty tips or to protect your skin?
No leh. Wow, my skin very bad. I'm like the Mark Lee like that, yeah. Yeah. Next question.
Right. Okay. So let's move on to more finance related topics lah. So there is actually a few questions talking about the upcoming QT. So for those of you who don't know, QT actually means quantitative tightening. And many of the same type of questions in the same note, right, is asking what happens if a recession doesn't come, or what's your thoughts on QT and would it crash the markets further, yada yada yada. So just want to get thoughts from Eric. What's your thoughts, since you are the most quote unquote bullish here out of all of us? Do you think there is no effects to the market by and large?
I think there is recently I think I've kind of shifted my views a bit. Not to say that I believe the market will like immediately crash, but I think that um if you look at what the Fed is doing, it looks like they're not really hiking so fast, but they need to go through a few phases, right? Like to stop hiking and then to cut rates when the economy really crashes. So we need to go through that stage where they go through the real economy as in crashing, and then they start to think about cutting rates, and then probably we'll see some QE coming in. And then by then I would think late next year we might have a chance to see the bubble being blown up again.
Right. I think
Yeah.
we are also in a phase that is very interesting where uh the discussion was when bad news equals good news, right? Bad news meaning, let's say, unemployment numbers are high and employment numbers might be low and stuff like that. And then they're saying that, hey, it's a good thing because it might signal a Fed pivot. So when there will come a point where bad news is just bad news. Like bad news doesn't mean good news, and suddenly good news become bad news. And I don't know how people start fluffing things up. There'll be a point that we go back to normalcy. So I just want to caution people that when we keep talking about like recession, inflation, blah blah blah, they are going to affect like earnings. Companies are going to suffer. People are going to lose their jobs. Mortgages are going to default and stuff like that. So just keep that at the back of your mind before you start chanting that, oh, bad news is good news and yada yada, and start saying something that I don't understand. So I think next on, right, that the subsequent question is, people are now asking whether will markets go back to all-time highs. So Kelvin, do you think markets will go back to all-time highs after all this QT, all this sucking money, liquidity, the narrative and whatever?
Of course, of course. Like I mean, like historically,
Hopium.
market will go back to
What-
all-time high.
What if we are in the lost decade? What if the coming decade is if trades flat?
Wow. Actually, you know, right? Even if it's a lost decade, there are a lot of ways to earn from the market. You don't have to rely on the market going up to earn. First thing. Then the second thing is like, even if it's a lost decade, right? Let's say 10 years, if you just dollar cost average in, not timing the market, dollar cost average in, you will already break even by the third or fourth year already. So, so that's the second thing. Then if you really believe that there's a lost decade, why not try shorting the market yourself? Like
Not financial advice, Don't listen to this and start shorting.
Yeah, not financial advice. I mean, I'm just saying like, what you are saying and what you are doing is completely different. So, yeah. So that's what I think.
Hey, you go and give this kind of financial advice later, your viewers say 2022 I follow you long the market, I lose money. Then 2023 I short the market, I lose money again.
Personally, I don't believe that there will be a lost decade. Just saying. Like there's nothing showing signs of a lost decade happening. But if we did, like all of us can't even predict it happening because it will be another black swan event. So no point waiting for it.
Right, agreed. Actually,
Yeah, speaking of the just now talking about pivot, right? Fed pivot. I think this one, I think viewers, right, might want to take some time to let that sink in, you know. This pivot thing is not going to come. Not going to come in 2023, not going to come, probably not in 2024. The one reason is because like we are really at different era now. A lot of things happening, like including the war. Usually we say war won't have much impact, but this round the war and also all this anti-globalization trend, right? Actually point towards a environment that is prone to higher inflation. Last time I think Fed always side to the side of like try to easing because they can do that. Inflation stay below 2%. They can do that. Now they cannot now. So let that sink in. Don't keep on hoping for this pivot thing and then market rally. I think this one have some patience and reset the expectation. I think that one is important.
so are you saying that this time is different?
Not to say different, it's just that looking at the environment and just be realistic about it. Yeah.
Okay, so it's different lah.
If you say this time is different, every time is different one.
Okay,
You look at
understand.
90s, different. 80s also
Can.
different.
I would
look
I
at
would
World Cup,
encourage-
every country got chance to win. So
Right.
yeah.
I will encourage viewers that is tuning in now. I think there's 90 of you here. Howard Marks recently released quite an interesting memo. It's called Sea Change. So for those of you who haven't catch it, I think it's a 10 minutes read. He was talking about how inflation probably wouldn't be like low, so we might not go back to 0 to 2% in the coming decade. And interest rates might not also be low, so it might trend between 2 to 4%. But this is a billionaire doing his own things, and he has been distress. He has been in the space of distress investing. So he's just saying that maybe there is a space for this kind of investing again, where interest rates or this kind of fixed income junk bonds giving like 8-10% is good enough. Like you don't have to take on additional risk in the equities market. That's just my rough understanding of that memo. So that's that. I think I want to pivot over many people asking about Tesla. So let's at least try to give them some accountability. Let's talk a little bit about Tesla and get their wish. Let's grant their wish. So just a broad-based picture first. Any outlook for Tesla in 2023? Continue diamond handling, buy the
I want
dip.
to ask Chicken first. When are you going to buy Tesla?
Fun fact though, so actually, and I think for viewers that don't know, four of us actually have a group chat on Telegram. I don't know why we are not using WhatsApp, even though I'm long meta. But anyway, I've been doing quite a little bit of due diligence on Tesla over the last few days. So I've a few friends that texted me also asking me when I'm going to buy Tesla. So Tesla itself is an interesting company. I would just say that I don't really know, like I don't know it inside out. Valuations, if it continues coming down, it will look more and more attractive. So since it's not a money losing company, I'm open to suggestions and I'm open to investing into it. I just don't buy companies that don't earn money, like Simulator, for example. No offense to Eric, but yeah. But back to
you don't
Kelvin
buy
again.
in which company?
I don't buy what?
Nothing.
But back to Kelvin. What's your outlook for Tesla in 2023?
Tesla in 2023, in my opinion, I may be wrong, just
Right.
saying. So I foresee 2023 will have a recession. Either it's a mild or a deep one. This one I don't know, but I know that there's a high chance of a recession happening already. You see the yield curve that's like going like 18 feet underground. There's no way there won't be any recession happening. And if a recession happens, historically, like vehicle sales have always gone down during recessions. So car companies are going to be affected. But with that being said, premium car companies actually do well during recession. So there are two sides to this. So I don't know which side will Tesla be on. But I believe that their sales will definitely be affected more or less. I just don't know how bad it is. How bad it will be. So that's the bad side. Then on the good side, Tesla is doing a lot of stuff, expanding, ramping up their production, finding a new factory, increasing a lot of stuff like Tesla Semi, Tesla Cybertruck, all will be doing in 2023. So I just have to see. Either way, I'm already into Tesla so heavily. There's nothing else I can do, right, Eric?
Right. So I want to be the bear here.
You can
I want to
always sell it.
I think that will make great content. But I want to be a small bear here, small bear on Tesla. I want to ask like a few questions, right? So you talk about Tesla now. At least they're selling at premium margins. They are in the premium space, right? They have like 3 times the margins of all the competitors and stuff like that. But if they really want to achieve that 10M target, I think they will have to move down the value chain, right? They have to support a much cheaper version for the mass public. So in this case, I don't know when it will happen, but I know it will happen. At least in my projection, I'm thinking that it will happen. That's why I crunch my numbers in that perspective. But given the interest rate now, I honestly don't know how people are gonna afford like a premium vehicle. So that's my concern for now. Like, does any of y'all have any same concerns, or like if the 50% growth suddenly dropped to like 20% or something, then how now, brown cow? I want to hear the perspective from Eric.
If it drops to 20%, I think the valuation will come down quite a bit, and then I will most likely text you, ask you to buy in, because you have a good track record. Every time you buy something, right, Charlie Munger,
it will go down even more.
Probably want to come in and scoop up
but
some
it will go down
after
even
you
more.
bought it.
Yeah.
Yeah. But at least we get the manga effect, right? Like, wow, this is a value play now. Yeah. So nothing much we can do. Like what Kelvin said, like we just got to hold on. Like Amazon previously during the uh .com crash or something like that, it dropped like 80-90%. But imagine you sell out after you drop 80-90%. I think Bunti will know, right? Like the crazy amount of upside you will miss by doing a sellout at the worst possible time. But we don't know when is it going to turn around. Like that's why don't I think the play some of them actually did, right, was past 2 years was to like sell the shares and buy leaps. And then they keep saying that you print a lot of money by 2024. I
Because
think
it's a leverage play. But
yeah,
yeah.
and there's a time expiry to
Mm.
it. That's why I don't really encourage people, right, who are not so super duper sure that it's going to happen to go into leverage and put yourself in this time where you have to
Right.
make sure that the stock must go up in
Mm.
1 year, otherwise you're screwed.
In
Yeah,
fact,
so
I'll warn against people trying to do
yeah,
something like that. I wouldn't say
correct.
discourage. I'll warn against people. Because you honestly don't know how long the bear market is gonna be. And
That's why.
like I know there's somebody in this chat here, like somebody in this four squares. That time when Alibaba was like 100 plus, the person actually not advised me. The guy was joking, telling me to convert my whole portfolio into leaps. Since you're so confident Alibaba will come back up, right? Buy leaps 2024. Lucky I never listened. If not, the leaps will all decay until don't know the parents can never recognize. Right, Bunti? I give you a time
Eh?
to defend yourself.
Is it? Is it? Did I say that? Yeah. Nah, no comment, no comment. This one too long story.
Right. I think also then maybe I'll throw the question over to Bunti, right? There's a question on Slido also asking. So one of the biggest bull of Tesla is actually Chicken Genius. I think he's not an unfamiliar face. So he recently just tweeted, right? He just bought like Ethereum and he had a starter position in Tesla, I think $300,000. So he was asking, so is this the bottom? Our savior is here. So can we go all into Tesla, or what do you read of this Chicken Genius signal?
I cannot lah. He also said, right? If you look at his latest tweet, making a clown emoji. It's like 5%. So if you follow him, you follow 5%. I think that's okay. Yeah, the thing is, he put in 5% in there. It's like 300K in, and then you put in 300K, which is your 100%. Then cannot be lah. Follow the percentage as well, then I think it's fine. 5%, I think no problem. You won't die for putting 5% of your net worth in any things, right? And most that 5% gone to zero, you still have 95%.
Okay, that's a very short answer, but I have another follow-up question. So do you think that recently, when Elon, will he really step down? Because he recently tweeted, right, on Twitter saying that he will abide by majority. So there's a question from Daniel. Do you guys think that Elon will really step down as CEO of Twitter, or he TCSS again? TCSS is Stock Cock Sing Song,
I
if you
think
guys don't know.
title wise, I mean, not surprised if he appoints someone as CEO or chief tweet or anything, right? I think this one definitely can happen, but you have to remember that Twitter, right, is not just like any company. It is like wholly owned by him, like privately owned by him. So if Twitter go down, I mean, what can he do, right? He have to save the company. So I think whether he appoint a new CEO or he run the show himself, right? This company, he will still spend a lot of time, a lot of effort, a lot of brain power just to make Twitter great again. So I think they have to let that sink in. That's what I'm thinking.
Right. There's a question for me. It's a little bit out of context, but I'll just answer it briefly from Never Kill Me. Just saw the latest video of Kelvin about investing into VWRA. Maybe a question for CK. Why are you invested in VT as opposed to VWRA, which can save on tax? Is it too much trouble for a different platform? Long story short, if I'm not wrong, based on my very vague memory, I think VT has a much lower expense ratio compared to VWRA. VT is at like 0.0002 or something, and VWRA is 0.22. But yes, one is also dividend accumulating, the other one isn't. So dividend accumulating means that VT pays out dividends to me on a whatever basis, and then VWRA compounds internally. so they save on the taxes as well. You ask me why. I mean, I don't see a lot of difference. If you're gonna index, then just choose an index and go with it. I don't care whether you use SPY, VOO, or whatever nonsense instruments there are. For me, it's not a big position, and it's only a few $1,000s. They tax. They're gonna tax like 10 cents. I mean, they have a minimum tax. It's not gonna affect too much of my position. So yeah, VT makes up like 3% of my portfolio. It's a long-term play, so I'm intending to index it like for the next 40 years, for foreseeable 40 years. So yeah, that's why the expense ratio was a bigger concern for me. So I hope I answered the question. Yeah, a question from Tap. So we just now talk about like the yield curve inversion and everybody expecting a recession, right? Like what Kelvin said. So then the question is, what happens if the recession don't come?
Wow, hallelujah already.
All in.
Like right now, everything is like. Actually, I wouldn't be surprised that the market don't do anything if we avoid a recession. Like if you check the next quarter's earnings, right? Analysts are not expecting a recession for next quarter. At least they don't expect the company earnings to fall too bad. So if a recession doesn't come, that means nothing has changed, right? So the market wouldn't react otherwise. But if a recession did come, then you will see a bigger fall. So that's what I think.
On that same note, right? Since most of us or things are looking so bearish, right, and most of us are slowly turning bearish, Jay is asking, are you guys hedging your long-term portfolio? Whether is it via option? Actually, we talked about this topic, like we touched on it briefly in our previous episode with Josh. So the question, the answer is more so like what are you trying to achieve with your portfolio? Like hedging is to make you feel better, or to profit in between and then to buy lower, or what exactly is your objective of trying to hedge? Because if it's a negative correlation, like let's say you long big tech and then you short Nasdaq, like it's a totally negative correlation, then you might as well sell the position, because by having 100% in long big tech and then you short like 20% Nasdaq, it's like basically selling 20% away. So if you are using unrelated like ways, like let's say you go into like I don't know, liquor or Rolexes or whatever, that's diversifying. That's not really like hedging your portfolio. So there's just a little bit nuance there. But I'll open it to the floor. Any of y'all intending to hedge, or are y'all doing anything to protect your portfolio in any way?
I want to point out this word hedging. Sounds very fancy. Wow, doing high-tech stuff. I do
Cause
hedging.
hedge fund ma. I
sounds
Ray
good.
Dalio.
Only actually no difference compared to you just sell a portion of a portfolio if you don't feel comfortable having, let's say, 100% in equities. Then just sell a portion, put in bond, get the don't know what 3, 4, 5% or whatever percent that interest that you get. I think those are fine. It's just that you need to be aware that once you do that, right, basically you are timing the market, getting in and out. Because once you get out, say you get out 30% or 50%, then when to get back in. So then if you get back in, then do you need to take it out again if you see something wrong? So it becomes like a timing in out kind of situation. So do you want to be in that situation or not? I think that's very tiring. I think at least from my experience.
For Eric and Kevin?
At least for me, the way I hedge, okay, so I don't really hedge. It's more like what I do with my spare cash. So the spare cash I'm putting in SSB earn a set 3.5%, putting in high yield savings account earn a set 3%. So basically, to me, hedging is more like what I'm doing with my spare cash is if I want to conserve bullet. I think hedging is actually quite dangerous. Like if you are doing it wrongly, right, it will be a double negative. And double negative in this case wouldn't be a positive. It means your portfolio will die faster, that's all. Like imagine, I know that Adam Khoo mentioned about hedging via TLT. But if this year, right, if you check TLT and S&P 500, both are actually going in the same direction. So if you've done that, like what Chicken Genius did at the beginning of this year, your portfolio will be going down even faster than usual. So hedging is the short-term thing, and short-term thing is trying to time the market, and I think it's dangerous. So just don't hedge. Don't hedge is better.
For Eric, on this hedging topic?
I have never known how to hedge. So when you talk about this topic, I'm like I'm a bit lost. Like, what am I supposed to do? Like, I know what's a hedgehog lah, but I don't know. I think I got to go and see some Kelvin videos to educate myself.
No, hedging
Okay,
is like
so
playing both side. Like you want to
yeah,
bet
Playing
who
both
win.
sides.
Last night, Argentina versus France. Why not I put 50% of my bet on France, 50% on my bet on Argentina. Then go and watch the football.
Actually, on that
Then
note,
either way
right?
you win.
Yesterday I saw the match first half. 2-0. I thought France is buried already. I said like gone already lah. Just whack everything into the Argentina sure win already. Wow.
but
Heng,
you
I
still
never go
win
and
what
bet.
at the end.
No. I think the betting one, right? They only like take the
Like
full
whether is it
time only.
penalty and yeah, right.
Yeah, the
I saw
penalty is
online
excluded.
also.
So
Yeah.
also can't be too sure. Even soccer match, the ball is round. Better don't gamble, everybody.
Stock market even worse. It's not even
Yeah.
don't even know what shape is it. No shape. But I think there is also, so I think a lot of Tesla investors now also very jittery, right? Like looking at the stock performance, it's down 60% year to date. Then there's always this constant harping on, is it gonna go up? Is it gonna go back up? Is it gonna go back up? I think as a non-investor, you just have to take into account the fundamentals of the business. If they're gonna keep printing profits, keep printing cash flow, the market is gonna reflect it. So whether like if the question on if Tesla is gonna go back up to like $400, $500, if they're gonna print enough cash flow and the market is assigning a decent enough multiple to them, yes, sure, why not? Why are they not gonna go back up? Unless there's something very big, like a grave problem with the business. If not, I would presume that it will go back up. So that's my short commentary or defense for Tesla. Going back to its quote unquote high price. Hey, Sean. I don't know whether you guys know him, Sean Fu. He's a Singaporean. He runs a pretty big YouTube channel as well. I think 50, 60K subs. He's pretty, I wouldn't say bearish, but he's very bullish on gold. So he keeps talking about like the changing world order, about petrodollar, about China and the BRICS and stuff like that. So his question is along the same lines. Do you think Chinese equities in general will outperform the American stock market once Chairman Xi reopens the economy? That's a very loaded question. I'm a bit scared here because we have a lot of Tesla investors and I seem to be the only one defending China. But I want to hear from the other side first, though. Do you guys have any opinions? Maybe, Bunti, do you have any opinions on this? About
No,
what
I'm
China
interested
outperforming?
to just I want to pick that questions to ask you actually. Yeah, I want to hear your answer.
I scared. Kelvin or Eric, got anyone want to say something first?
Hard to say there.
But I
just
think
hedge both ways lah. Hedge both ways lah.
Yeah,
You buy both
50-50,
lah.
right? 50
Right.
US, 50 China.
just
Correct?
sell everything. Sell everything.
Sell what? Sell what thing?
I don't know. Whatever you're having. Just sell everything.
Why would I do that? But anyway, I think to long story short, right? To answer Sean's question, it's a very loaded question because you bring in politics as well, and then you bring in how Chinese economy is going to perform, and then Chinese equities, right? There are a few concepts here that need to be taken apart. I think the economy and the stock market is two different things. So economy good doesn't mean stock market automatically becomes good. That's one part. So on my perspective, I would think that the economy is definitely going to recover because from a low base effect, 2021 has been pretty bad for China. I think even if you look at the bluff numbers, the make-believe numbers coming out from China, it's like 2-3% or something. But I don't believe so because when I look at the earnings of the companies, they're all pretty bad. So I would presume that China is already in a recession. So if it reopens, the upcoming 3 to 4 months is going to be bad. Like any other countries that reopens, if it's a disorderly opening, unlike Singapore, people are gonna die, medical facilities are gonna get overwhelmed, people are gonna be scared, and someone you plus Chinese New Year, it's it's a peep show, if I can put it that way. So then from that perspective, moving on from Q2 to Q4, I would presume that China is gonna reopen and it's gonna be a crazy boom. That's why I'm actually looking forward to some of these companies like LVMH, for example, because I would postulate that there will be some level of revenge spending from the Chinese because the Chinese savings rate is at all-time highs after these 2 years of lockdown. So back to whether Chinese equities are going to generate outperform, I don't know. If I know, I would have all in already, but I all in too early because I was invested in Chinese equities since 2021. Chinese equities also have a few portions, like you have the mainland one, you have the tech one, you have the Hang Seng one, and yada yada. Generally, if the economy is opening up, I would presume earnings are going to be better. But whether all the Chinese money is going to flow to Chinese companies, I have my own skepticism. But they wouldn't be too bad lah. Like compared to last year, it would have a better year-on-year comparisons. But to say that from here, wow, China go to the moon, I'm a bit skeptical. That said, many of the tech companies that I own are unfairly beaten down. So if there is a re-rating, then I look forward to the re-rating. If not, yeah, that's that. I hope I answered your question. So, all right, yes, I think there was one question from Jay I missed out. He took it back up again. So you're saying almost everyone is expecting some sort of recession in 2023. Whether is it a mild one, is it a huge one, a deep recession or whatever. So how far do you think that the current market has already priced in that particular recession? Because the market is they tend to be quote unquote forward looking, right? So maybe thoughts on that. Bunti?
Yeah, I think not much has been priced in if we really get into a ugly situations. Because now actually like we are standing here, right? Today, 19th of December. We cannot see one like 2023. How does it look like? We can only guess, and we don't know like how it will looks like. But let's say we try to play this kind of like scenario game. Okay, there could be a good scenario, everything turns out well, and then a neutral scenario, and then you play a ugly scenario. If you just put in the ugly scenario outright, we're talking about people losing their jobs. We're talking about like automobile markets drop, real estate crash. That kind of situations is like super painful. That if you look back on today's share market, stock market, look at the prices, right? It's still like high and very high. Like I don't think it has priced in like an ugly scenario. That's why also you can say that it is like a slowly pricing in. That's why the price keep on going down and down and down. I think that's the situation that we are facing. Yeah.
For Kelvin, what's your thoughts on this pricing in?
Yeah, definitely not pricing for me lah. So, like I said earlier on, everyone you can just go to Yahoo to check all the analyst estimates for next quarter lah. All of them are expecting good results for next quarter. Then that's the first thing. Then second thing, right? If you check historically, S&P 500 tend to crash in the middle of a recession. So if it's priced in, there's no way that it will crash anymore. And historically, it doesn't do that. Historically, it will crash for a few months during the recession. Then right in the middle of the recession, it will find a bottom. So I don't think it's pricing yet lah. So that's the thing.
Okay, you know what else is not priced in? The like button, guys. There's 150 of you here. There's like 40 over likes only. It's like 1/3. Then when I look at the stock market, right, that's why rate. You all never smash the like button, that's why rate. You see, S&P 500 flat, but up negative 1.77%. Guys, you all need to step up on the like button. This first warning. Okay, anyway, I think Eric, do you have any comments on this pricing in of the recession?
I agree with Kelvin. I think the recession doesn't seem to have been priced in. S&P, the P ratio, I think is still just slightly below the average, if I'm not wrong lah. So I think they haven't really priced in the drop. It feels like a slow grind down. Like after holding Tesla, right? You feel like every time there's a catalyst, like wow, it's gonna turn back up, and then after that it bump up a bit, and then it grind down again. Then say, oh no, the semi is coming out, another catalyst, and then it bump up a little bit, grind down again. Every time you're giving us false hope, but if you look at the big picture, right, you zoom out, it's always a downtrend. So I don't know, it's just like slowly cooking us alive, kind of thing. The
So
stock
I
market
have a
boiling.
follow-up question. If all of you think that it's not pricing, right? How come you're not shorting the market right now?
Because I don't know how to
Because I don't know. No, because I don't know whether a recession is how big the recession is gonna be.
Yeah.
And like Bunti said, in out. I don't know.
I will ask back you these questions, right? Have you tried shorting any stock or not? Have you tried it?
No leh. My heart
Yeah,
not
try
cannot
first.
take it leh.
You try, then you will know. Like actually, it's very stressful. I tried that,
Yeah.
so quite stressful, and you know it. I did talk to you about that.
By the way, guys, when you say shorting, right? I'm taking it to refer that you actually sell the shares, right? You're not like buying
You
puts and
I
saying that
sell
you're
short
shorting
lah.
the market.
actually on let's say the common brokerage, if you just short sell, it will show as like negative positions. Like you can short sell Apple, right? You say you short sell, then it will show as negative 100. Then you get the cash, you see cash on your account. Then you have a negative positions, and then Apple just 10x, then your portfolio just wipe up.
I understand
It's
Congrats.
what is short selling. I'm just saying that when we say why don't you short the market, right? We are actually referring to you guys selling the actual shares. We're not saying buying a put option to benefit if the price goes down, because
No lah.
I don't think that's actually
But both
shorting, right?
both
No, no, no.
mathematically achieve the same effect lah. At least for buying put and selling the stock.
No, I think buying puts, right? Actually, you're not under the obligation. But if let's say you short the shares directly, right, and the thing shoot up, or they will mark to market and
Unlimited.
margin call you.
Yes,
Yeah,
unlimited
they will
loss.
actually margin call.
Yeah. When we talk about shorting, it's really shorting like what I just said. You have a negative
Yeah,
positions on the shares. Like, and you don't have a shares one. It's not like I long 100 shares, I short 100 shares, then I got 0 position. That one is not short. That one is not shorting. That one is just selling your positions. So if you really shorting, like you start from 0, then you sell the share first. Then you have a negative exposure on the stock price. So stock price go up 10%, you lose 10%. It go up 10x, then you lose 10x. Yeah.
I think you won't even get a chance to go to 10x lah.
Yeah.
You will
You
get
will
margin called off.
margin
Yeah.
call will go come first.
Yeah. But I think in terms of buying put options on like SPX or whatever, it's more of like hedging, I guess. So let's say you have a
yeah.
portfolio of random stocks and then you sell, you buy a put, or you buy insurance in this case, then you pay the premium. So that's one way of hedging. But I think you really need to do like the correlation, then all those stuff to really see how are you hedging. If not, if you don't have like fanciful Excel, I think don't bother. Like too much time and effort also. I don't know whether it's even worth the results or not.
I don't
There's a
know.
question from Mark. As an investor staying in Singapore, which is better, buying Alibaba in Hong Kong or in US cost wise? No difference. I think it depends. So US, if they allow fractional trading, if your brokerage allow fractional trading, then if you have a smaller lot size, you can buy in the US. On Hong Kong, the lot size is much bigger. So I think it's in the thousands of dollars because it's 100 minimum share. And take into account FX rate also. So, but Singapore dollar has been relatively strong against both Hong Kong dollar and US. So I know that US and Hong Kong dollar got a peg, but it seems like the Hong Kong dollar has been challenging the top end of the peg for quite some time. They are trying to defend the Hong Kong to US dollar peg. But if you buy in US, if you believe in the USD strengthening or whatever, then so be it lah. And it's easier because you can buy fractional share. I think that's that. But
I
yeah,
think cost wise, no brainer. US one is cheaper. Like I tried before. Hong Kong
cheaper
brokerage
as
fee
in,
generally is
what do you
higher.
mean?
The transaction cost. Hong Kong one
But
is
now
more
it's
expensive.
zero fees, right, Kelvin? All zero fee, right?
But for Hong Kong, there will be fees. US don't really have any fees.
Oh,
And,
right.
and for Hong Kong, you there's a minimum to buy, right? And for US,
100
there's a
100
fractional
lots.
shares.
Yeah. And on the
Right.
currency, right, I think I need to clarify. Actually, it doesn't matter. Like, it's priced in USD or is it priced in Hong Kong dollar? It doesn't matter because what you own is the stake of the company. Like, let's say you price it in, let's say, Ethereum, right? You say this shares is like how many Ethereum per share, and then Ethereum just collapsed 99%. It doesn't really matter. It's just translation only. What I mean is that you will see that as per Ethereum, the share price will shoot up a lot. Then you convert the Ethereum back to SGD, then you get back the same thing again. So many people are confused about this currency translation things. I'll just say it doesn't matter, like the currency
Right.
side.
I want to clarify on the currency side, meaning, okay, so what Bunti says is correct because 1 to 8 is fungible. So 1 US share equals to 8 Hong Kong share. By currency, like the FX risk I'm talking about is more of like, because now you have a $10,000 pot of Singapore dollar. If you convert it to Hong Kong dollars and convert it to US dollars to buy the same X amount of shares, there might be some difference because, at least for me, I bought it 2 years ago And if you were to see, you map out the Hong Kong dollar, US dollar difference, right? Actually, there is a difference, even though we like to think that they are packed, because US and Hong Kong dollar trades in a band, and the band is flexible. I don't know why is it flexible. Why not just peg it to a certain number? But yes, it's a little bit too confusing and it's too short a time. So let's just skip this question. You more interested, you can send me an email or something. I will see whether I can explain it to you or not. But anyway, I think there's this interesting question because we have been talking about like equities and bonds, right? What about crypto? So Zev is asking, what about rooting for crypto? What's left after the onslaught has resilience and higher survival probability? And I think there is this quote. I don't know whether you guys think that it's misused or not, but Warren Buffett got said before, right? When others are greedy, I'm fearful. When others are fearful, I'm greedy. And I think that it's quite fearful in the crypto space, at least for now. After like the FTX thing, and then now Binance also got some issues. So wanted to get your take, maybe for Eric. What's your take on this?
He also
thing?
said crypto is rat poison, right?
Oh no! So which one do you listen to?
I think the crypto is rat poison is specifically for crypto. So
okay.
it looks like he's not too keen on it now, because he basically he buys the asset, right? He looks at something. I think he explained before that when he buys a stock, right, he looks at the company. So he has to produce some value. So basically, why he doesn't buy some company, he basically think that the asset, right, that's behind the stock is not producing enough value to warrant that share price. That's at least that's what I think he's trying to say lah. So if you ask him to look at crypto, say it doesn't produce any value at all. So basically, it's just a greater fool game, right? Like I sell to you, you sell to the next person, and so on and so forth. And as long as everyone keeps hoping that you'll go up, keeps being greedy that you will one day go to the moon, then the game will carry on lah. But if let's say everyone one day lose trust in it, and then nobody wants to trade or buy it, then the gig is up, lor, according to I think Warren Buffett lah. Yeah, not I say
Right.
one. He say
Right. Just a PSA, public service announcement. Any questions, just type in the chat. We probably are going to hang around for another maybe 15 to 20 minutes. So if you have a lot of questions, we can do a lightning round. If not, we'll take some time to expound on the remaining questions. But yeah, I think back to Kelvin also, thoughts on crypto. Are you dollar cost averaging in? What are you going to do with your current positions?
I'm not touching. No, I'm not touching. I mean, I'm not doing anything to crypto now. Not DCing. I'm just holding as per normal. So I want to give my comment a bit about crypto. If you see the crash, it has been becoming lesser and lesser. So at first it was like there's a Luna crash, right? The Luna crash is much bigger compared to the FTX crash, which is much more smaller lah. The only thing that's left to crash now is Binance, but somehow Binance is not crashing yet. So I don't know when that will happen, if it ever did. And so Eric just now also mentioned about crypto. Recently I watched a podcast by the MKBHD, the tech guy from US. So he says that the reason he's not buying crypto yet is because he can't see a reason for crypto right now other than to make money. So it's basically crypto is just basically right now, at least for Bitcoin, is basically right now a way for you, like for anyone right now, like all of us right now are buying crypto is just to make money, right? It's not to use it for whatever transaction. So unless there's a real use for crypto, right now all it's doing is just to trying to make people rich lah. And as long as that thing doesn't grow in functionality, right, it's very hard to give a permanent increase to crypto, sort of. So in short, like crypto right now is just a supply and demand thing, and there's nothing else pushing the crypto upwards other than just greed lah, basically.
So you don't subscribe to the Bitcoin being digital gold theory?
So like, okay, let's say if you own Bitcoin lah, I'm sure some of you do lah. Are you going to spend Bitcoin? You won't, right? Because you believe that Bitcoin will go up in value. So that prevents you from selling Bitcoin. And how would it be a digital currency if you don't spend it? So that
Not
theory
digital
is invalid.
currency, like like store of value, like gold. We don't usually use gold coins to go and buy Thai fund also, right? We basically just store it in the bank box and that's it. So they are saying that you probably take
That's
over
why
the
gold hasn't been gaining value, right? It has only been keeping that store of value constant throughout the decades, the millennia. You don't see gold making people rich, right?
no.
So that's the thing. For same thing as crypto law, is only keeping the value, it's not making people rich. That's what I'm saying.
But crypto is not keeping the value. It's like it's destroying the value.
No, as in, I think to stand on Kelvin's side, it's more of like if you believe the utility of Bitcoin is to store value, then yeah lah, the way that the price is gonna chart out, it's gonna be something like gold lor, because it's a store of value ma. But then if you're gonna bring in other utilities, like how is it gonna, like for example Ethereum is another discussion. But if Bitcoin per se, nobody really use it as a digital currency, so then that is not really a utility for Bitcoin anymore. But I saw Bunti unmuted just now. Do you have any comments you wanted to add?
No lah. I think I agree with all you all just said.
Cannot
No,
agree.
no.
You must disagree so
Huh?
that got drama. If not,
No,
nothing to say.
I think yeah, nothing more to add. You guys are the expert. I'm not expert on crypto.
Okay, then I think you're expert in predicting the market, because we have a very long discussion on predicting the market. I think Inlin was talking about how about Michael Burry predicting S&P to reach 1862. 1862. S&P 500 now is what? How many points? 3,000.
Close to
4,000,
4,000.
right?
4,000. That's more
Close
than
to
50% crash. So Bunti, you say great minds think alike, right, Bunti? So what do you think of this?
Michael Burry, he's famous for what? Calling calling bubbles and then calling for market crash, right? So
Yeah.
he's almost like, at least his persona, right, is more like perma bear already, in my opinion. So if you listen to him, of course he will tell you market is crashing. If not this year, then we repeat again, right? Next year again, market is crashing. So repeat until he get it correct now. So I think like if you are happy to keep your money in cash and just waiting for the market crash, then just keep in cash now. While other people tell you have fun staying poor. Yeah, right. So I think that's the things lah. At least for me, I would say have money, stay invested. You need to have a percentage that you are comfortable. It could be like 5%, 10%, could be 50%, could be 70%, right? Any numbers, right? Once you have that figure, then you just try to maintain that figure, and then you are just taking the stock market volatility as something that is like you are okay to tolerate. Then just build your wealth using that now. I think that's the right way to approach.
Right. Then, since on this crypto subject, right, KS asking, would you buy Coinbase instead, as it's the exchange and make its money gradually from transactions? I think this topic on investing into crypto exchanges is a bit sensitive. That time we discussed a new, very, very politically sensitive. So I think we will make a pass on that question. But I think equities per se, you invest like equities. So if you want to buy into a business, judge it from a perspective of being a company owner. So what kind of cash flow they're going to print, what's their PE ratio, what's the valuation, blah, blah, blah. So you judge it from that perspective. Don't say that just because you want crypto exposure, that's why I go and buy a crypto exchange. And because Coinbase is the only one listed, that's why I buy Coinbase. I think that's not a very sound investing plan. I hope I answer.
And to add on that, actually, not like you just look at Coinbase business, right? How they earn the monies is basically people trading. So they take a cut. And you need to aware that under current, like crypto winter situations, all this trading volume will actually go down and not back up. Unless really there's a trigger and then crypto moon again, then okay. If you want to bet on that, I think that's fine. But then if you just extrapolate what we are experiencing now, winter is coming, the volume is going down. So they might not have enough revenue to pay for all their expenses. So it might become a loss-making companies, because it used to be profitable, I think, when during good time. But moving forward, could be a risky investment. Just be aware on that.
Yeah, the only thing even more riskier than that is to not smash the like button. So this is the second time. 60 likes, 180 of 70 of you are watching.
I actually knew that was coming.
Is it?
Yeah.
Anyway, I think just last few questions we're gonna take. I think there's quite a specific discussion on Bitcoin and other coins or other cryptocurrency that actually provides an yield. Personally, I'm not knowledgeable enough to comment. So yes, if you guys are interested, as in the panel here, Bunty, Kelvin, and Eric, if you guys have time, you can also dive deeper into like GMX or GNS that are actually quote unquote productive tokens. But yeah, I think we will end off this crypto discussion here. So there was this high yield. So Isa is asking, would you invest in a high yield dividend ETF like SCHD over the S&P 500 ETF to hedge against the? Why today so many questions about hedging? Okay. This hedging topic, right? You need to know there are costs to hedging, or there are costs to doing a specific action, whether is it in the forms of opportunity costs, or whether is it in the forms of fees or insurance premiums or whatever. Whenever you do something, there is a cost associated to it. So when you ask us like point blank things like that, I would presume that, or if I can answer on the pen on behalf of all four of us, probably not, because number one, we don't really know what's the strategy going into it. And number two, I think most of us like to keep things kind of simple. So we don't really employ in this kind of fanciful strategies. But I'm not saying that you shouldn't. If you know what you're doing, please go ahead. But yeah, I saw Bunty.
I think that question's right. You just need to take out the hedging word. That word, it kind of like messed up with us. You just read again. Would you invest in a high yield dividend ETF like SCHD over the S&P 500 ETF? Okay. Given that it is more concentrated, you read it that way. I think
that's true.
A lot better, right?
Right.
But let me try to answer these questions. I don't know, like, okay, don't talk about the hedging, but just look at SCHD. This is one investment. This one, if I recall correctly, they focus on high dividend stocks. The other one, S&P 500, the top 500 companies. Both of them is actually like exposed to stock market, okay? And they tend to go up and down together. Just now, I just did a quick check. This correlation concept, right? Like how correlated are they? If I just look at the portfolio visualizer numbers, right? Their correlation number is 0.93. So 93%, meaning that if you try to have some hedging, you want something up and down.
So there's no hedging.
Yeah. So this one is not a hedge. But let's say if you say you want to own some dividend stocks and you have a reason to own dividend stocks, then go ahead to buy SCHD. I think that's fine. Some people are attracted to dividend companies. I think that's fine. Just one thing you need to be aware is that if you buy US high dividend companies, you are paying the 30% withholding tax, unless you are like US citizens. Then you do your own tax, right? If you are based outside of US, for example, you're based in Malaysia, Singapore, you need to pay that 30%. If 30% on a high dividend rate, right? That one can be a huge cost. You need to take that into consideration. Yeah.
This is a good topic to expound though, because I know the other two. For Eric, you hold dividend stocks. Kelvin, you don't hold dividend stocks. So I'm gonna see you guys fight it out. Like, why do you all hold or why do you not hold dividend stocks in your portfolio? Kelvin, you want to start first?
So let's say a stock is not $1. If
there's
the
no
stock
good
pays
reason not to hold dividend.
I disagree though, but okay, never mind. Kelvin can go first.
Okay.
I'll support you, don't worry.
So the whole concept of dividend is the company taking out part of the assets to pay out as dividend, right? $1. If the stock is worth $1, if it pays out 4 cents of dividend, the next day the stock falls down to 96 cents. So dividend stock is basically just forced selling of the stock. So to me, there's no difference besides between the non-dividend stock and the dividend stock. In terms of paying out dividend, is the same as you selling yourself and the company paying you dividend. But with that being said, dividend stock have a track record of being more stable compared to growth stocks. So I guess that's why Eric wants to invest in dividend stock, for the stability, not for the passive income. Yeah.
Okay, Eric, you make your case.
I invest in dividend stock because I like the stability and I also like the income. Shook, man. Like every other month they put in a few hundred, a few thousand into their account. Feels great, man.
That doesn't make sense, right? So you can technically pay yourself dividend, Tesla stock dividend, by selling 4% of your Tesla stock every year.
What
There's
if
no
it
difference.
drops?
Dividend stock can also drop, man.
That's not wrong. Eric?
I don't know. Like they pay me better than I pay myself.
Like
Yeah,
that, it's a psychological thing, right? It's not a
Yeah.
practical thing, right?
I think it's even more extreme than psychology. This is almost like a religion already, you know. When you talk
Yeah,
about
yeah.
dividend investing, the way I see it, when people talk about dividend, they don't see it like, okay, I want a company that is matured, stable, pay dividends. It's not like that one. Their religion is more about like, you know, I'm building a portfolio. I started out putting money in, buying shares, and then the companies pay me dividend. I take the dividend, then I buy more shares, and then I have more money, I put in, then I buy more shares, and then more shares pay more dividend, and then I get more money to buy dividend shares. You
To
know,
the
that
moon.
kind of like compounding is like a religion that they all enjoy. Then I think Eric have some, you know, that kind of mentality in there, you know, shock, you know. So I think religion, so when it becomes religion, hard to question it. Later unfriend you how?
I don't know. I don't really see it as a religion. Like, it's. I mean, you guys don't do it. I'm okay. Like, it's. I mean, I just find that it helps. In terms of when you have market turmoil, right? And then they disperse a little bit of cash. Like, hey, here's a few $100 to help you emotionally tide over this period. Like, I feel that it's better than, just looking at the stock like grinding lower and lower, and there's no money to buy cai fan. You don't feel happy, so
But
they
then
give you some money.
if I flip the same logic, right, on
Mm,
itself, so
mm.
when your stock moon, right, like 2020 3x, right, you got feedback yourself the money and then make yourself feel better. You don't need to feel better, right? So you see, there's this logic a bit weird though, is it not?
No.
Like you feel
So
good
so
when
so
bad
so
market,
you
but
you you say that when the stocks give you dividend, right? You feel great. Then you say that when Tesla moon or some
yeah,
other stock
you feel
moons,
even
right?
greater.
You feel even greater.
Yeah,
Okay, yes, that's true. That's why but you must remember, with the upside comes the downside also. Like,
correct.
Tesla can
Agree.
moon, Tesla can also inverse moon. Like, it can go down
Inverse moon.
80%, right? So
Okay.
I can't take that kind of volatility. I only know that I can't take it
Right.
when it really shows up in my portfolio. Like, previously it was like a small portion. I'm like, whatever lah. Now
Right.
it's after like 2020 and 2021, right? It built up to quite a substantial portion.
Mm.
So after it crashed like 60%, I was like, wow, really sian to see the thing drop so much. It's really quite painful lah. So I can't say that I'm totally immune to it. I would have preferred that it stays more stable rather than moon like, wow, up 10x. You know, if you up like, don't know, 20% every year consistently, I'm in fact more happy to see that than like,
People will die for 20% per annum returns, by the way. Buffett
is
is
it?
20% per annum. Yeah, but for 60 years lah. But
Oh my
yeah,
god.
so I mean average on annual per annum is around 8 to 10%. So the last 2-3 years, the performance has been quite skewed in a way, just to ground people into understanding what's like the average returns of the market. So as long as you can beat consistently 10%, you're actually a fantastic investor for a long period of time. By the way, I need to qualify that. So then there's a question also, right? Like, so how many years should you beat the S&P 500 to be considered a good investor? For me, I think at least double digits. So even if you beat 5 years, 8 years, is you can be lucky for 5 to 8 years. But if you start talking about 10 years, 15 years, 20 years, every year you can compound. By the way, this is compounded return, not simple return. So compounded as in like 10% compound, 10% compound, 10%. Yeah, that would probably make you a pretty decent investor if you are picking stocks. So yeah, that's that. I think back to this dividend topic, right? Personally, for me, I'm I, I don't have a religion, so I'm not like against dividend investing or for dividend investing because I need to hedge my downside here. I don't offend people. But that being said,
Stop
my
hedging.
my my how to say my 宗旨, what the heck is 宗旨 in English? My philosophy, is it?
Yeah.
Yeah. Okay. My
Objective
philosophy
philosophy.
is regardless whether you want to buy REITs, you want to buy dividend stocks, you want to buy high growth companies, as long as the fundamentals are good, if it's printing cash flow, printing earnings, it's a good enough valuation. Just buy that. The company won't die so badly. Like it won't go bankrupt. The money won't go missing. I mean, as long as there's good management and you have a margin of safety, it's fine. So like you see, if interest rate increase, all your big REITs, even good ones, Suntec, everything all down 20%, right? So if you buy at the lower price, you wouldn't do too badly. I mean, that's my perspective. So same thing for growth stocks as well. But yeah, okay, that's that. I think I can close this chapter. Very scary, this dividend investing. I think Jay then asked, we'll take a few more questions, then I will kind of close because it's getting late also. It's 11 p.m. already for foreign viewers. Jay was asking, understand that Kelvin has a FIRE plan. FIRE is financial independence, retire early, and is hoping to achieve it in the next few years. So how about the rest? And how does the current weak market affect your path to FIRE? Bunti or Eric, want to go first? No plan? I
I
presume no plan.
don't really have a FIRE plan. Like, for me, right, I just want to keep it simple. Simple as in when I look at myself, right, or look at my business, I want to see like annual growth. I want to see that every year I am growing in some sense. Like for example, just now I very quickly tabulated my net worth over the different asset class, right? I see that, hey, actually this year, because of the market turmoil, the portfolio value didn't really move up. So it means that that's this year that I'm stagnating. But the good thing is my employment, my own business is grown okay for this year. So that kind of like there's a bright spark for me lah. So next year, what I endeavor to do, investment to also grow, maybe 10% or so, and then my personal business also can grow 10 to 15%. I think that's uh yeah, that's what I aim for lah. Like whether I fire or not. Anyway, I was quite happy I reached my FRS already. Yay. My 7-year
FRS
plan.
is full retirement sum, right?
Yeah, the CPF one. So
Right.
I reached it like in November. So I was pretty happy. So yeah, so there's have a plan, execute it lah. That's from who ah? I follow this guy, I think Dividend Warrior or something. Or yeah, so you used to be from Investing Forum. So they actually advocate CPF lah as a way to build up wealth, something like Mr. Lu lah. So I'm glad I actually put channel a bit so that in this market turmoil I can still find some some happiness looking at my CPF.
Right. What about Bunti? Any FIRE plan or no plan?
Yeah, no. I think I subscribe to Mr. Lu philosophy on this. I mean, you fire, you stop working, then do what, right? So you still need to find something to do. So I would rather like looking for a career or a job that can help me grow. I mean, there's some networking with colleagues and so on. So these are stuff that add color to the life, right? So
Right. Can
yeah.
talk sing
No
song at
plan.
11 p.m. right on YouTube
Yeah.
also.
Yes.
A lot of color.
Yeah.
For Kelvin, you're still pursuing, right, on your FIRE plan? Like any changes to the
still
plan?
pursuing. The difference is that I'm trying not to rely on the market to FIRE. Is that I try to grow my business income lah. So I have no idea when the market is going to go up. If there's a lost decade, I rather not rely on Tesla to FIRE. That was my original plan last year. Seems like it has failed. So now it's back to my business income now.
Okay, thanks. For me, I haven't even stepped out into the society. I haven't finished my university yet, so I have no plan at all. Yeah, that's about it. I think Boon Song had a very interesting comment. I wanted to challenge Kelvin and Eric, right? If one of your holdings drop 50% and you're not inclined to buy more, that means that you have some lack of confidence in that holding. Any comments or not from the two of you?
Okay, I think this question kind of makes it seem as if investing is binary. Like if you don't do this, that means that you must be this. Sometimes that's not really the case. So for me, right, the say that Tesla dropped 50%. Why don't I buy in now? seriously, because I see that the environment has changed. Not that I don't have confidence in Tesla. If I don't have confidence in it anymore, I'll probably have cut some of my Tesla or even sell out completely. So the fact that I'm holding on to it, right, means that I have confidence in it long term. It's just that for the short term wise, right, I do want to build up my cash reserve, because as you know, cash reserve, you don't really build it up overnight. So you need to slowly,
Correct.
accumulate a bit more. So as we know that the market is not going to bounce back so fast, right? So probably we need to like take some time to build up a war chest, and then when the real stock market crash comes, we can at least pick up some bargains here and there.
Eric has a larger project,
Mm. Yeah, like
holding
I'm
cash.
saving for a property also.
What about Kelvin? Why are you not buying
Same
downwards?
as Eric. I think not buying doesn't mean that I'm not bullish. Like when I made the video about talking about Tesla risk, everyone is saying that you have sold Tesla, you are this toxic bear now. Not really. My Tesla holdings was at like 85%. There's no way for me to add on even more. So even after this drop, my Tesla holding is still at about, I think, 70%. So I'm not going to bring it up back to 80% lah. There's too much risk on one company lah. If the only way I can increase my risk is to go work at Tesla already lah. So and the other thing is that, like, when Warren Buffett say like diversification is to protect against ignorance, right? So that's why people are not ignorant. That's why people are trying to all in into Tesla. But maybe, are you too overconfident into your Tesla thesis, or is it just like blind faith lah? So for me, I realized that maybe my risk tolerance is not that high lah. So I rather not be so heavy into Tesla, not by selling by reducing my allocation. Yeah.
Right. I think the stock market is the best device to understand yourself, but it's also the most expensive way to do it. So it's a self-actualization process and a journey. So you guys need to do whatever you need to do. And picking on this Warren Buffett, like a lot of people like to quote him lah. Whether is it misquote or not, that's another thing. But the funny thing is, like, Buffett tend to give a specific advice like, oh, normal people should just index, try to diversify. Then when you look at him, he own self play in his own world and his own pattern, but he advised people other things. Sounds familiar, right? On YouTube, people advise like, hey, you're supposed to do this, and then I own self do something else. So even if the greatest of the greatest are doing a certain way, there is a quote unquote model answer. Like, there's a right way to do things. We know that the 60-40 portfolio allocation is good. Indexing long term, if you don't all in and then you dollar cost average, is good, because these are back tested results. But it doesn't mean that if life really only have one answer, I think life is quite boring. So there's just some parting words. And the only thing not boring is the like button, guys. There's 200 of y'all. There's only 70 likes. So like button not boring. You press really got confetti coming out. So trust me. I think maybe just to end off the discussion, right? I think it's getting a little bit late. The last 10 minutes, I just want to go around this idea. It's a roundtable discussion, so we will go one round and talk about it. Maybe Bunti, you can share what's your strategy for 2023 moving forward. Do you have any top conviction picks? Any stocks that you want to DCA in or continue increasing your allocation to? Two parts, strategy for 2023, top picks, and that you want to increase your allocation or DCA in.
Yeah, top picks, I would say, back to my own portfolio. I'm still very bullish on US tech. I think when it comes to the landscape or the environment moving forward, tech is definitely something that's not going to go away. It's just that last time tech is just like a small, tiny sector, like isolated. Now tech become everything. Like you shopping, you live your life on all these big tech companies, right? So I think US big tech is still my high convictions. I'll still add on those. And then what's the other questions?
Strategy for 2023.
Yeah, strategy, just DCA though. Which I've been doing.
Yeah, great.
Yeah. And one more thing I want to share, like I think some of you may know I went on like vacation holiday for past 1 week. I think this past 1 week I tried. I try not to like focus too much on stock market, but I still check all this chat group and so on. I'm still reading the markets. But one thing I try to stay away is making trades or buying companies within this vacation period, because I just want to stay away. Right? And I think I noticed that if you really have like a DCA plan with some platforms, right? They put money in on your behalf, meaning that you don't have to place the trade yourself. You just do a monthly deductions, and they just buy all these index funds or whatever. I think this one is really like a good stuff, like emotionally. Like it actually allows you at the same time continue to invest, continue to put your money to work. At the same time, you can really like tune out from the market and just spend your time with your family and so on. I think this one is a good benefits. I just want to remind people. I mean, the way that we talk about investing is not the only way. Like you don't have to get excited or over investing. Yeah.
Okay, moving on to Kelvin. Strategy for 2023, top conviction or top picks.
I think it's the same for this year. Maybe continue to diversify away from Tesla, top into like topics like Apple, Microsoft, Amazon, those kind of. And also I'm also trying to convert my portfolio into that 80-20 barbell strategy, where like 80% is like core holdings, 20% is like risky stuff like Tesla, individual stocks like basically. So meanwhile, I'm trying to keep my spare cash into SSB,
T-bills,
high yield
all
savings
those.
accounts.
Alright.
T-bills I don't really like because it's locked up for 6 months. So it's very hard to get back my money immediately if I want to. SSB will be way easier.
Wait,
And
to
at the same
clarify,
time,
the 80-20, the allocation, 80% is what? Index funds, is it? Like
yeah,
S&P
80%
500.
is like broad-based index funds. So that's my ultimate goal that I will only reach like 5-6 years later because it's not easy to all in into it because of how big my Tesla holding is. Then also another thing, 2023, one of my resolution is to learn all the option strategies, like all the spread that like Aiden Khoo is talking about, right? He sounds so pro talking about it, and I don't get what he's trying to say. So that's my one thing to do next year.
For Eric, you want to
Okay,
spread too?
so no, not I'm banned from options already because
Okay.
I'm not so pro in it. Self-ban. But anyway, my top pick for next year, right? Looking at QQQ, SPY. Locally, I'm looking at DBS. Yeah. Then maybe one of the REITs lah. Have to see which one comes down to a value region. Yep. Otherwise, just saving money.
Okay. I think for the three of them, it's all generally quite the same. So I think I'm going to spice things up a little bit. I think for those of you who have been following me, you'll know that the only thing I DCA is index. So I buy Vanguard Total like a few $100s a month. If not, the rest of my own picks, like for my own portfolio, I time the market. Like I buy when there is crazy amount of fear, and I stop when I don't think the market is doing right. Hasn't been doing too badly this year. I mean, at least in the space that I'm in Chinese tech, it hasn't been doing too badly, but I don't want to get too ahead of myself. So 2023 might still be a bad year for us, us as in on the other side of the camp. Then, so for my strategy, I'm still sticking to it. I'm still timing the market. It's not good advice, quote unquote good advice, but if to me, I fundamentally believe that if you're an active investor, if you pick stocks, you have to time the market to a certain extent because your entry price matter. Like you entered at $200 and $60 is a lot of difference. So in terms of top picks wise, just choose what companies you know better. I think for the three of them, it's similar because I think for US tech, a lot of us have a greater appreciation of their penetration in our life, like daily livelihoods. So very easy to do due diligence. But for other stocks specifically, for me, I mean, if there is value, if it comes down to a large extent, then sure, I'll buy it. But if not, if you ask me Apple, Microsoft today, would I buy? Probably not. I need a bigger margin of safety, but that's my investing style. I'm
Sorry,
quite cheapskate.
can I
Sure.
clarify, like to Samantha, like DBS is really very high now. I also personally feel it's very high. What I mean is, why is it my top pick, right? Because I bought it like very low during the COVID crash, and then after
Time
that
the
it
market.
went up to $30, and then I sold it away. So I was very 后悔 now lah, very regret. So I want to say sorry to DBS. If it ever goes back to that level, I want to have you in my arms again. That's what I mean lah. Yeah, not now lah. The valuation now is like really high.
Yeah.
Yep.
So yeah, back to my point, as in if you are picking individual stocks, I think the valuation that you enter in is quite critical for long-term like performance. So that's that. I hope you guys enjoy the entire discussion. I think it's quite late already, 11:26 p.m. Hope this discussion was fruitful, and yeah, thank all of you for participating and asking the questions and whatever. Yeah, Eric, yes.
Say it, Chiking.
Sorry. Oh, smash the like
Remember
button,
to-
guys. It's the
yes.
last one really. This is the last time that I'll
Subscribe.
ask you to subscribe. Yeah, and we'll see you in the next video. And yeah, okay, have a great night, everybody, and early Christmas. I don't know whether we'll have another episode before Christmas, so we'll just wish you an early Christmas first. Goodbye.
Bye.
Bye.
Bye, guys.